What's your take on Jeffrey Gunlock's comments?
I think he's got very little confidence in the Fed, in the policy response, and I get that. I mean, it's been a challenging environment for investors because of things that are happening. The Treasury trying to figure out the Fed. I'm a little bit more optimistic than that. Remember, and I think he's right about this, if yields go down, that means multiples go up. So it's actually a good thing. I think for his prediction to come to pass, we have to have a hard landing scenario for the economy, and I don't really see that. So I'm more optimistic than he is, but he's a bond guy, and I'm more of a stock guy.
Okay, fair enough. So I do want to get your take on Jay Powell and his comments yesterday. Also, what it means for the December meeting. I'm looking at the CME FedWatch tool. Traders are pricing in just about a 75% chance of a pause at the next meeting. What's your take?
I mean, I think Powell was practically perfect yesterday. He basically came out and said, look, there are two preconditions for, lower interest rates going forward. One, we've got to have a rebalance in the labor market, and we're seeing that, and it's coming from the supply side, which I thought was very interesting, and that's why GDP growth has continued to remain robust. And then the second part of it is that we've got to see, some GDP growth that's below potential. And what's interesting, and this was the most dovish thing I think he said in the statement, was the 4.9% GDP growth we just got in the third quarter. Don't worry about that. That was just catch-up GDP growth. We're actually still growing below potential. So both of these preconditions are there. The Fed is in pause and reflect mode. The bias is loosening, not tightening.
Dave, that's an interesting point about GDP, but one thing he was very concerned about, that was inflation. He really maintained the fact that 2% inflation is the Fed's target. We got 3 more inflation reports coming up before the next meeting. We got 1 PCE and 2 CPIs. How do you see that impacting the markets?
Well, the Fed in their September SEP projected that core PCE would be 3.7 by the end of the year. It's 3.7 today. So they are ahead of target the way that Powell sees it. So they just are in a loosening bias or a pause bias. I don't see any more rate hikes. And he basically broadcasted that unless something weird happens and inflation spikes.
All right, so David, here's the thing. You don't see any more rate hikes. So I have to ask you, we're also seeing yields on bonds decline right now. You're a big believer that we're set up for a Santa Claus rally. What has to happen for that Santa Claus rally? Does that actually hinge on the idea that the Fed either completely stops in December and pauses?
Well, that's going to happen anyway. The Santa Claus rally had started in early October, and then Hamas and higher rates kind of hijacked that. But now rates are sort of gathering, equilibrium. That's going to put multiples in equilibrium. And guess what? We've got earnings growth again. We haven't had that in a year. And so the Santa Claus rally is going to be powered by fundamentals rather than hype, which is what carried the market forward. And as we go into next year, we get rising earnings, we get falling yields. That's a great setup for stocks. So Santa Claus, I believe.